Hello and welcome to The Bottom Line here on TVP World, where we break down some of the main business and economic stories of the day. I'm your host, Marie Kasia. Poland's economy is gaining momentum. New data shows GDP growth has accelerated in the second quarter of this year, solidifying the country's position as the fastest growing economy in Central and Eastern Europe and one of the fastest growing in Europe. Konrad Gorlinski reports.
Poland's Central Statistical Office released its first second quarter GDP estimates on Wednesday, and the numbers did not disappoint.
So this 3.4% we can see means acceleration from the first quarter. In the first quarter we saw 3.2, now it is 3.4. And it proves the point that economic growth in Poland is slightly quickening.
Second quarter GDP grew 3.4% year-on-year, 0.2 points above the previous quarter, fueling expectations of faster momentum in the second half of the year. Full details on the growth drivers will be available in September, but analysts already point to two main forces: resilient household consumption and the surge in fixed investment, boosted mainly by EU recovery funds frozen under the previous government.
Investment is becoming this second engine of economic growth in Poland, and it significantly supports private consumption, which traditionally is strong in Poland.
Poland's results outpaced all of Europe outside of Ireland and certainly all of its peers in the Central Eastern Europe region. The Czech Republic posted 2.4% growth in the second quarter, while Hungary balances at recession's edge with 0.2%. Slovakia and Romania haven't reported their numbers yet, with the economy expanding at 1.2% in the former and contracting by 1.8% in the latter. The momentum is set to build as public investments financed with recovery money flow deeper into the economy, with analysts projecting their pace to rise by up to 11% in real terms by the fourth quarter. The Polish Finance Ministry projects GDP growth at 3.7% in 2025, but many analysts see that as rather conservative.
In Bank PKO, we still hold to our forecast of 4.0 economic growth.
One potential wildcard: Friday's meeting between US President Donald Trump and Russian President Vladimir Putin in Alaska. Could a Ukraine deal push these projections even higher?
If assuming that there are good news about Ukraine, then it may lead to the improvement of the mood in Poland and to the acceleration of the investment, and most likely over a longer period of time to the acceleration of exports as well.
Most analysts agree, however, that a breakthrough in Ukraine would be visible in Polish financial markets almost immediately. But unfortunately, the spillover into the broader economy could take at least until late next year.
This Q2 GDP reading means that Poland has delivered 5 quarters of GDP above 3%, where 3 of those displayed growth, and that is quite the achievement. But can that be sustained, and how? Let's find out more with Urszula Kryńska, an economist from PKO BP. Hello, and thank you very much for joining us.
Thank you.
So let's start with growth. Poland's economy is doing well. It's displaying growth for the second quarter running. For the first quarter, we had 3.2%. For this quarter, we have 3.4% year on year. And so it's aligning with economists' forecasts. And it must be a relief for Poland's finance and economy minister, Andrzej Domański, and obviously for Poland's prime minister. Is Poland looking to make it to 4% GDP growth by the end of this year? Is it too early to tell? And perhaps what does PKO BP say?
Yeah, we are quite conscious. We are not as optimistic as some other analysts. We think that this year GDP growth would probably stabilize at the current level. So the whole year GDP forecast is 3.4%.
3.4?
Yeah, it's still a lot, of course. Next year we could have some slight acceleration. But what is important is that growth is solid, and I would say that it's quite well balanced. But of course, we act in maybe not very favorable external environment. So we think that net export during the whole year will be drag on economic growth. Each quarter, net export would deduct more than 1 percentage point of GDP growth. So that's why not more than 3.5% this year.
Okay, so 3.5 is your absolute maximum forecast?
For now, yes. Of course, we could end with GDP growth at 4%, but it would require strong acceleration in growth in the second half of the year in quarter-on-quarter terms. Right now, we have growth of 0.8% in quarter-on-quarter terms, and in the second half, we would need economy to grow by 1.5%. It's quite a lot. Sure. I would say.
Okay, it's been an interesting summer. We have the US tariffs kicking in. Poland has a new president, and the Polish government itself is struggling to get itself in order and retain support. On the other hand, we have investment that's been on the rise, and obviously we have the Ukraine-Russia war, and we are awaiting to see what happens tomorrow. Do you think that Poland's economy can retain its strength and keep growing into 2026?
Yeah, I think yes. I think that the fundamentals for growth are quite strong. We have very solid consumption. We think that in the second quarter, consumption accelerated as compared with the first quarter. We could expect consumption growth of close to 4% this and next year. And this consumption is, of course, supported by strong fundamentals. Real wage growth is still very solid at almost 5% in the first half of this year. It is, of course, much less than 10% last year, but still more than the consumption growth. So we think that the consumption will be growing, not only spending on goods, but services sector is extremely strong in Poland. Now we are in the middle, I would say, at the peak of holiday season, and we see it in our high-frequency data that this holiday season is extremely good for Polish service sector. And apart from this consumption, we expect that investment will accelerate strongly at the end of the year. At the turn of 2025 and 2026, we expect investment in national account terms to grow in double-digit pace. So we think that investment will accelerate, of course, supported by EU funds, but we see among our clients that companies see need to invest, and they want to invest not only using EU funds, but also using their own funds. In Poland, investment is mainly financed by companies' own funds. So we see this investment growing, and of course, they are more keen to take out investment loans.
And when you say investment, what kind of areas of investment? Can you tell us a little bit about that? And also, can you tell us whether we can be expecting more foreign direct investment?
Yeah, we would expect more foreign direct investment because in Polish economy is maybe quite strange at the first sight, because you have foreign direct investment growing when Polish companies have good financial results, because the bulk of this foreign investment inflow is reinvested profits. So we expect foreign-owned companies to have good results this and next year, and this will of course boost foreign direct investment inflow. Historical data shows that about 70% of foreign companies' profit stays in Poland and is reinvested. So if you look at foreign-owned companies, they use their own funds to finance their investment outlays, but these own funds are treated as FDI inflow. So of course FDI will keep growing, but when it comes to private investment, we expect that companies will invest in the areas that are extremely needed right now. So we expect them to keep investing in energy transition and of course automation. These are the areas where investment is forced by what is going on in the economy. We have aging population, diminishing labor force, so it would require automation, and on the other hand, companies are paying one of the highest energy prices in Europe. So if you connect these two factors, we think that there are strong fundamentals, solid grants for private investment growth this and next year.
Okay, well, that takes us nicely to my next question, because we are told that growth is this growth that we see in the second quarter is propped up by the solid consumption and public investment, but it's not necessarily the most solid form of economic growth. I spoke to Professor Witold Orłowski yesterday, and he expressed some concerns.
But the point is that this growth is basically supported by the consumer demand, by the internal demand, with very weak exports and with, well, probably accelerating, but still relatively weak investment activity. And every economist will tell that this is not a nice combination because it leads to some deterioration of the external accounts of the economy, so the current account deficit increase and moving from the surplus to the deficit, and therefore cannot last for a very long time.
So what are your thoughts on Professor Orłowski?
Maybe I'm not as pessimistic as Professor Orłowski. I would say that if you look at the structure of GDP growth right now, our estimates for second quarter show of course that consumption is the main engine of growth, but investment would add almost as much as consumption. And of course net export will be drag on growth, but it's not the result of maybe too strong consumption growth, but it's the result of investment. In Poland, investment is much more import consuming than consumption. It's maybe three times more import consuming than consumption. And if you look at investment if you look at military spending and investment in energy sector, this have even higher import intensity. So the fact that Polish current account deteriorates is to much extent connected with the fact that we import a lot of weapons.
Sure. We already know that the weak points of the Polish economy at the moment, especially in this quarter, are the industry and construction. In your opinion, what is necessary to actually get these parts of the Polish economy going, and how important are they to Polish economic growth?
Yes, of course, consumption is quite... if you look at, generally speaking, if you look at the monthly data that we have, so I mean retail sales, industrial production and consumption, they constitute about half of the economy. So it's, you can discuss, is it much or not much? Construction is not a substantial part of it. The highest are, of course, the remaining two. But, of course, consumption, construction growth, construction has been declining for several months now. But first of all, I think that the quality of this monthly data is not the greatest one, so I wouldn't worry about that. And for this consumption to grow, we would need, for instance, acceleration in building permits and accelerating activity in housing sectors. And we would expect that because now we have much lower interest rates than they used to be, and we expect that we'll have another rate cuts in the future. So with lower interest rate, I think that the construction sector will revive as well.
What can we expect to see in the detailed breakdown of the report for Q2? Is there anything that would surprise us in the next fortnight when we see it?
If it's surprised, if I knew, it wouldn't be a surprise. But for now, we think that consumption growth accelerated to close to 4%, while investment growth was probably lower than in the first quarter. In the first quarter of this year, we were quite surprised that investment increased by 6%. We think that it could have been connected with some one-off spending in the public sector, so probably it will not be sustained. But we think that nevertheless investment will keep growing. And of course, as I said before, because imports growth is stronger than exports, then net export will subtract from the economic growth. That's what we expect for now.
Poland can obviously revel in its steady and continued growth, but we cannot ignore the fact that the country's labor force is facing the highest level of redundancies since 2020. So we hear that we expect about 80,000 people are expected to lose their jobs this year. I suppose the most obvious question is why? If
you look at this data, of course, the devil is in the details. If you look at detailed data, you could see that about 70% of this announced redundancies are redundancies announced in Poczta Polska. So it's in the post office company, which is in the process of restructuring, and the fact that that there are layoffs announced is not connected with the fact that those people will lose their jobs. They will be offered new employment terms. So I would say that I wouldn't be so much concerned. When you look at the labor market data for Poland, there recently has been a lot of misleading signals, I would say. If you look at for instance, unemployment rate, it has increased to 5.54% in July. It increased in June. In July, it's alone, we had the increase of 30,000 new unemployed. So if you look at the data at first, you may be concerned, of course, because the last time when there was such a high unemployment growth in July, the one is in 2000, so it was 25 years ago. But if you look into detail, then you know that some regulation changed, so the increase is not connected by the worsening economic situation, but by the fact that it's that unemployed people no longer has to come to the labor office each month. So if they don't need to come to the labor office each month, they will not be removed from the registers because they didn't come, for instance. So there is a lot of noise in the data, I would say. The data on the announced redundancies, of course, at face value, it's very worrying. But if you dig into the detail, it's not so much worrying.
But there are many major banks in Warsaw, for instance, that are shutting down their offices, and many people are being laid off.
Yes, but if you look at the scale of it, and if you look at the labor force in Poland, that is about 16 million people, so it's not so worrying. Most of them will find jobs elsewhere. So we do not expect unemployment to increase in Poland much this year. At the end of the year, we expect unemployment to be at 5.4%. And the reason why we do not expect growing unemployment, even though labor market conditions are worse than they used to be, of course, there is no doubt about that. But each year, about 150,000 people leave labor force because they reach retirement age. So with this shrinking labor force, we do not expect unemployment to go down, but probably people will be forced to accept worse jobs than they had before.
Sure. Poland's economy is going from strength to strength. I want to bring up a visual here. It is the fastest growing economy in the Central and Eastern European region and Europe this quarter, so that is quite the title to go away with for the second quarter. Does this mean that the Polish economy is more resilient in terms of a crisis, in terms of external factors?
Yes, I would say that Poland is extremely a resilient economy. The track record of economic growth for the last 20 years have proved that Poland's economy did not shrink during Lehman recession, and the only time we had declining GDP growth was during the pandemic. So I would say that the track record of the growth track record of the economy is quite impressive, but of course it's the result of the resilience. The economy is large, well diversified, with strong internal market, and of course export has been the main engine of growth for the last 10 years.
Okay, Urszula Kryńska, economist at PKO BP Bank, thank you so much for being with us today. And that concludes the bottom line for today. I was your host, Marie Cato. We bring you the best of regional business Monday to Friday at 5:10 CET on TVP World. And in the meantime, for the latest in regional business, follow us on X and on tvpworld.com. Goodbye.